excited to have Scott Gruber, the CEO and President of Bridge Capital, with me today to discuss some real estate investment strategies.
Ashley, I appreciate you having me. What's the first question you have for me today?
The first question that I'm going to talk to Scott about is how real estate investors can maximize on their returns using financing.
Ashley, the number one question that we get is how does Bridge Capital financing help them? It's really pretty simple. So the first thing that you have to remember is that when an investor comes to us, they've already made the decision that they're going to invest in real estate. So it's not about are they going to invest in real estate, it's how they're going to maximize their returns. So assuming that it's an investor that doesn't need cash flow today, so that you don't need to purchase on
a long time horizon investment.
Right, so if you take a longer term horizon, the question becomes, if you say you already decide you're going to put a $100,000 investment into real estate, the value proposition is, wouldn't you like to be able to invest in as much real estate as you possibly can for that $100,000? So what Bridge Capital says is, look, instead of buying one home today for all cash, let's go ahead and purchase that second home now. Because for all the reasons that you're investing in real estate, you'd want to purchase more today. More property, more upside potential, more rent increases, just more ways to maximize the return in the portfolio. So with that being said, Bridge Capital financing is where investors are able to use our financings to maximize their returns.
Okay. So when we talk about real estate investors, I want to talk about the strategies. A lot of real estate investors have a short-term strategy and then they have their long-term strategy. A short-term strategy investor is going to be more of someone who has all cash and they need the mailbox money today. So they want the their rents coming in today. They want to have some cash flow every month from this rental house. On a long-term investment, why don't you talk about that and talk about how that works?
So in order to have the leverage, the loan makes sense, you really have to take a longer horizon. So on average, an investor will take a financing from Bridge Capital for say 10 to 12 years.
Yeah.
So that money that would ordinarily go to them to pay this month's bills is in effect just reinvested into paying the loan. So you now have one mortgage payment, but it covers two houses, so you've got the taxes and the insurance on both homes. So instead of sending the money to the investor to spend, it just goes to retire that second loan. So 10 years from now, you have two fully paid up properties. You would have had the upside potential on both properties. You would have had the rent increase on both properties. And 10 years from now, when that loan is paid off, you would have twice the cash flow that would be sent for what would then be those purposes. And a lot of the people that will use our financings would be kind of mid-career professionals, say that 40 to 45, 50-year-old professional. So they can afford to wait 10 years, so now they're 50, 55, and that's ideally when they would like to have twice the cash flow, right.
I wanted to play a scenario now that we're talking about, so you know that you have your all cash buy and you use our financing to obtain double the property rent. So let's run a scenario. Let's say we have $100,000 from an investor. How would he or she utilize the $100,000? How would the numbers look, and how would the mortgage look with that?
All right, so right now when we talk to investors, the range of what they're looking for in investment property is all over the place. But I would say on average, when an investor is looking at an all-cash purchase on a property, they're looking at maybe an 8 to 10% yield. So what becomes intimidating is they're going to say, how does Bridge Capital's 12% financing make sense when you're only getting an 8 to 10% yield on the property that you're investing? So the way you need to look at this is, so let's just call it for round purposes, let's say that each property yields 10%. So property 1 yields 10%, property 2 yields 10%, right? So the two properties combined are yielding 20%. Bridge Capital financing would cover, say, half of the investment. So the first half of it, there is no interest expense because it's your money, okay? And then the second half would be Bridge Capital's 12%. So you've got 10% on property 1, 10% on property 2, which is 20% on the income side. 12% on the expense side leaves the investor a positive 8%. So if you take that positive 8%, that 8% is less than 10%. But you got to remember, every year the investor has paid off some of the the
Principal,
debt, right?
yeah.
So they have more equity. So every year they pay a little less interest.
And the
So
return
right.
is higher.
So in year one, it's 8% versus 10%.
Yeah.
But year two, it's say 8.5%. Okay. And what you really find is it's about that fourth or fifth year. Now, our team of underwriters can help an investor specifically understand on their exact loan when you cross over from earning a little less because you took the financing to earning a little more. But it typically takes about 4 or 5 years before the drag of paying us interest, because anytime you pay bridge capital interest, you're taking money out of the investor pocket and putting it in our pocket, which is something that people say, all right, if I'm going to buy it, which is in this case they're purchasing financing from us, I'm going to do it, but I need to understand why I'm doing it. It takes about 4 or 5 years before that expense is offset by more income to you. And of course, what you got to remember, if you take that long-term horizon, it's 4 or 5 years that the financing may drag your total returns. But once it passes, it stays passed forever. And then once the loan is gone, you get
double the rents, double the market appreciation. You get double your money, really.
Absolutely.
And you still invested that initial $100,000 in the investment.
And I know that if they're watching this interview today, it may not be 100% clear because we covered it real quick. But I would tell you, Bridge Capital, I think, does a wonderful job, and the underwriters can do a great job actually showing the individual investor exactly how our financing interlays with their portfolio, and how much more return they would get, and when they cross over to get it going from getting a little less to getting a little more. So I think we do a good job of really helping an investor make sense of when the financing is right for them.
Exactly, we do. We definitely put it.
In fact, Joe, what I say is, our internal slogan is, we are a common sense lender. If it makes sense, we do it. So what we really want to do is we take very seriously making sure that anybody that does utilize our financing is set up for success. So we want them to understand, and if it really does not make sense, we'd be the first to.
And we've done that. With taking it to loan committee, if the numbers just don't make sense and the investor is not going to be successful in the investment, we will not do it. So I'm really happy that we covered this topic. I think a lot of real estate investors will have a value add from this conversation. And if you have any questions, please contact us at info@bridgememphis.com.
And I appreciate the opportunity. Thanks.
Thank you.